You make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Today's podcast is sponsored by NetSuite, the easy-to-use cloud-based business management software for every aspect of your business. Download the CFO's Guide to AI and Machine Learning at netsuite.com/gold. The guide is free to you at netsuite.com/gold.
The Peter Schiff Show.
Hi, everybody. I am up here in Canada, or if Donald Trump has his way, the 51st United States. Although, you know, there's a lot of provinces up here in Canada, so maybe we could add a whole bunch of states if we annex Canada. I don't know if everybody would want to just be one gigantic state, although that would really change the complexion of the Senate, because I think there's a lot of Democrats up here, although Canada Trudeau announced that he was going to be retiring, and that's, you know, great news for Canada. He's done a horrible job in the there, though. I think maybe it's 90-day period or so before it becomes effective, so he can still do some more damage, just like Biden is hanging around doing more damage in the United States. But, you know, when I was listening to Donald Trump's press conference earlier today that he gave over at Mar-a-Lago. Again, he talked about, you know, making Canada a state. But when he spoke about Canada and our current relationship with Canada, he kept talking about how, you know, we're supporting Canada, we're defending Canada. And he said, look, we have a huge trade deficit with Canada, as if somehow that's harming the United States. It's actually helping the United States. It's unfortunate that we're not productive enough to get by without all those Canadian products. But Donald Trump specifically said, we don't need any Canadian cars. We don't need any Canadian timber. Well, of course we do. I mean, we build houses, we drive cars. I mean, if we didn't have access to Canadian lumber or Canadian cars or any of the other things that we import from Canada, America imports a lot of stuff from Canada. What does Donald Trump think would happen to the price of all that stuff? It would go way up. How we don't need any of the Canadian products. Said the same thing about Europe, you know. So we have a huge trade deficit with Europe. We don't need those products either. Of course we do. I mean, from Europe, we're buying stuff from Canada because we don't make it. That's why we're doing that. If we could make the stuff more efficiently, then we'd be doing it. The reason we're not doing it is because we can't. Now, we could, but that would require a lot of changes to the underlying structure of the economy, and it's going to have to start with the regulation, taxation, government spending, monetary policy. But none of those changes are likely to be implemented. But we do need all these products. But at the same time, he was criticizing Canada and Europe, saying we don't need any of their stuff. He was also talking about the huge inflation problem that he's inheriting from Joe Biden, as if, again, he had no role in creating the problem, which, of course, he did. As I've explained on this podcast, too, the big increase in the CPI and the worst year of CPI measured inflation was 2021, the very first year that Biden was in office. But that big jump started in the last few months of the Trump presidency. But of course, the policies that led to it began earlier in the Trump presidency. So it's not like he's But at the same time that he's saying we don't need any of these Canadian products, we don't need any of these European products, he's complaining to make it even higher is to deprive the United States of all these products, because that would reduce the supply of goods for Americans to buy. And basic economics, you reduce the supply, you get a big increase in the price. And that's exactly what would happen. You know, he also talked, you know, about why he wants to, we want to take over Greenland, the Panama Canal. And he implied that we might even try to seize these, you know, territories with military force. But he said, look, you know, if not that, it's going to be economic pressure. He said, you know, we'll sanction or we'll tariff Denmark if they don't want to give us Greenland or something like that. But again, he can't tariff Denmark. Denmark doesn't pay any tariffs. He just tariffs Americans who want to buy Danish products, making those products more expensive. So he wants to add to the inflationary problem. But, you know, at the same time that Donald Trump was talking about the inflation problem that he's inheriting from Biden, he also talked about the interest rate problem. He said interest rates are too high. We need lower inflation and we need lower interest rates, without recognizing that higher interest rates. But of course, the higher interest rates are going to do nothing unless we also get meaningful cuts in government spending. And so far, everything that the government has been spend more money. That's all they're doing. All Congress has approved since Trump was elected was more government spending and bigger deficits. Meanwhile, you know, Joe Biden just took, I don't know how many hundreds of thousands of acres on the ocean offshore and just permanently banned offshore drilling in those waters, making it a lot more difficult for, drill, baby, drill. You know, by the way, oil prices are now above $74 a barrel. They've been consistently rising over the past several weeks, as are a lot of other commodity prices. You know, this is an amazing thing. And I posted this chart on X. But if you look at the CRB index, commodity prices, today it's at a 14-year high, 14 years. And in the last 7 months, we're up over 28% in commodity prices. Now, how can the Federal Reserve prices are up 28% in 7 months, and that's in dollars. They're up more in euros. They're up more in Canadian dollars. Dollar's been strong. So commodity prices are surging all over the world, right? In Europe, they're up over 30%. You know, Christine Lagarde had a Twitter or an X post. She had a little video of herself. She's head of the ECB. And she greeted everybody by saying, 2025 is going to be a great year. This is the year inflation is coming back down to 2%. I mean, what is she smoking? It's first of all, it's about 3% now, but it's headed in the other direction. Prices are surging all around the world. Yes, we had a pullback in commodity prices as the Fed was initially tightening, but that's reversed. And again, we've had strong commodity prices, even with a strong dollar. So imagine how much stronger they're going to be when the dollar weakens, which eventually it is going to turn down. And, you know, this is despite oil. We're at a 14-year high. So oil has been a lot higher than $74 a barrel in the last 14 years. It's been well above 100. So oil is one of the bright spots in this dark cloud here of prices. Other commodity prices. Look at coffee prices, right? Look at sugar. Look at cocoa, right? And other grains are starting to move. Look at soybeans. Look at corn. All these food items. Everything is surging in price. At the same time, the Fed and the ECB, they're all saying, hey, we've won the inflation battle. We just want to make extra sure that we're down to 2%. They're not even close. And the bond market is starting to sniff this out. The yield on a 30-year U.S. Treasury today rose above 4.9%. We're at 4.92%. The yield on a 10-year is 4.69. So these are the highest yields that we've had since the Fed started cutting rates. In fact, you have to go back even further than that. But again, this does not surprise me. This is exactly what I was saying was going to happen even before the Fed started cutting. But I said that when the Fed did cut, that would be market ended in 2020, with the COVID, blow off top in bonds and bottom in yields. But we are moving substantially higher. Mortgage rates now are back above 7% and rising. They're going to be above 8% pretty soon for a 30-year fixed rate mortgage. But they're back above 7. Credit card rates are 25%. They're going to keep going up. Now, we got more bad news. I mean, forget about the fact that the mainstream media is ignoring this boom in commodity prices. I mean, which is completely inconsistent with the story the Fed is trying to sell. How can they be telling us that inflation is going to come down when prices are soaring? And these commodities, these are input costs. So they're going to bleed in to producer prices and consumer prices, right? They're going to move first. And then you're going to see it going, up the chain. So these are leading indicators. So how could you ignore? The last time we started to see commodity prices surging like this, it was before inflation really ran away. And then in the face of it, the Fed was still claiming that inflation was transitory, even though commodity prices were showing that that wasn't the case. Well, that's happening again. Now they're saying that, inflation's gone and commodities are surging. Or will cause the inflation. They are the result of the inflation that is already there. The Fed never put out the entire time. And now you're seeing it in these commodity prices. You're going to see it more in oil. Again, one of the reasons that we didn't have a bigger move up in oil when Biden was president, he's still president for a few more weeks, was his politically motivated decision to raid the Strategic Petroleum Reserve. Imagine where oil prices would have gone or might be now had we never, let loose all that oil. I mean, we didn't have to drill, baby drill. We just tapped. We just sold the oil that we already had. But, that card has been played. Trump is not going to do that. And so we're not going to get artificially low oil prices. Now, some people think, well, we're going to drill more oil. Maybe, but not until the prices are a lot higher. Because American oil companies are not going to invest in development and more CapEx for more drilling at $74 oil. They're just not going to do it. It's not high enough. But yes, if oil's back above 100 and it looks like it's going higher, and yeah, we'll probably get some more drilling. But that's not the environment that people expect. Everybody is talking about $40 oil. Well, at $40, no one's drilling oil. Despite the fact that they're ignoring commodity prices, and I don't see anybody talking about it, they couldn't ignore the economic data that came out today. There was a big jump in prices paid in the PMI. It was the ISM Services Index, which was higher than expected. It was one of the only economic data points that was above expectations, although we did get jolts today that was above. But it was at 54.1. But the prices paid spiked up, highest level in 2 years. Obviously, there's a lot of inflationary pressures that have been building. And that spooked the bond market, together with the JOLTS numbers that showed a spike above 8 million in the job openings. And I think part of that has to do with optimism. There is a lot of misplaced optimism among businesses that things are going to get better because we have Trump. Now, that's going to fade relatively quickly once Trump becomes president and things don't get better. In fact, At his press conference again today, Donald Trump again reiterated how things are going to immediately get better. He said it's going to be right away. We're going to have this instant boom, right? Everything's going to magically get better when he's president. That's not going to happen. And when it doesn't happen, then a lot of these job openings may disappear because the businesses are going to lose more workers. So are going to be very disappointed as the data, especially when it comes to inflation and the Fed rate cuts. Now, the probability of rate cuts declined today after the release of this hotter than expected inflation number. And as soon as it came out, gold, which was up about $25, sold off, and it still ended up, positive about 13, 14 bucks on the day. The dollar, which was down this morning, and it actually had a big pop yesterday. The dollar rallied. I'll get into that after the break on why the dollar rallied. But the dollar sold off as soon as this hotter than expected inflation numbers came out. But it's not just the inflation numbers themselves that caused the dollar to rally, but it was the reaction in the bond market where the bonds were hitting new lows for the year on this news, and that increase in bond yields is propping up the dollar. But that's not good for the dollar. The currency traders still don't get what's happening. They're still of the opinion that hotter than expected inflation just means the Fed has to fight hard. Bullish for the dollar. Well, that's not what it indicates. I've been saying this all along. It doesn't indicate that the Fed has to fight harder to win. It indicates that the Fed has already lost. Inflation won the war. And this is not bullish for the dollar. Inflation is going to keep getting worse. Yes, it may slow down the rate cuts, but the Fed is not going to hike. Even though it never should have cut rates, all 100 basis points were a mistake. They're not going to be able to correct the mistake, because to do that, they're going to look so foolish if they have to do that. But not only do they have to take away all 100 basis points, they need to have rates significantly higher than where they were when they started cutting. There's no way the Fed is going to do that. The only thing they're going to do is slow down the cuts. I can't see Powell hiking rates at all, even though he should. But he may not cut. But that's not bullish for the dollar, because if inflation keeps getting worse, and so instead of 2 or 3% inflation that people were expecting, we get 5 or 6 or 7% inflation, and the Fed just keeps rates where they are, that means a huge reduction in real rates. And that is very negative for the dollar, and that is very bullish for gold. And traders just haven't, connected the dots yet. But they As a business owner, I know the challenge of navigating unpredictable markets, interest rates, and inflation. That's why having the right tools are essential. NetSuite streamlines operations and scales with growth. Over 40,000 businesses have already future-proofed their businesses with NetSuite by Oracle, the #1 cloud ERP. NetSuite brings accounting, financial management, inventory, and HR into one fluid platform. With one unified business management suite, there's one source of truth, giving you the visibility and control you need to make quick decisions. With real-time insights and forecasting, you're peering into the future with actionable data. When you're closing the books in days, not weeks, you're spending less time looking backwards and more time on what's next. Whether your company is earning millions or even hundreds of millions, NetSuite helps you respond to immediate challenges and seize your biggest opportunities. NetSuite is the platform that I would choose, and you should too. Speaking of opportunity, download the CFO's Guide to AI and Machine Learning at netsuite.com/gold. The guide is free to you at netsuite.com/gold. That's netsuite.com/gold. Okay, so don't try to adjust your cameras or your computer. Hotel. I'm here in Calgary, and we're driving tomorrow morning. We're heading up to Lake Louise to ski for Rico. But this Wi-Fi here is not good enough to support the video, and so it's compromising the podcast. So in order for people to hear me better, we turned off the video, and so the rest of today's podcast is just going to be audio. Now, obviously, people that are just listening to the podcast on Schiff Radio or iTunes, doesn't matter to them. But for the people who are watching on YouTube, that's what's going on. But I will be back in Puerto Rico for my next podcast. So hopefully things work better. Although we have been having a lot of power outages in Puerto Rico while I was away, including a huge island-wide outage on New Year's Eve and New Year's Day. What a time for the island to go dark. But anyway, let me get back to what I was discussing break, and that is inflation. And investors still not understanding that inflation is not going down to 2%. It's going to be much, much higher than 2%. The Fed just has not leveled with the public or investors, and investors still believe the Fed, as opposed to and just looking at the chart of the CRB or understanding what inflation is. Look at the budget deficits. The national debt is now above $36.3 trillion. That means that we've added $8.5 trillion so far in Biden's 4 years of office. $8.5 trillion, over $8.5 trillion. That shattered Donald Trump's record for the most debt in any one presidential term. But what's even more maybe amazing, horrifying, shocking are probably better words, but Barack Obama, who has the most debt of any president, and of course Joe Biden was vice president for the entire 8 years that Obama was president, so you can hang some of the of the Obama deficits around Biden's neck. But he ran up $8.6 billion in debt in 4 years. Biden has done 8.5. In 8. Obama did 8.6 in 8 years. Biden has done 8.5 in 4. But by the time Biden leaves office, he will have broken that record. More debt than Obama did in 8. Now, unfortunately, I think if you add the increase in national debt, that's going to happen during the 4 years of Trump. If you add Trump's second term to his first term, he will beat Biden. He will beat Obama. So he's got the record, but he's not going to hold it for long because Trump is going to take it. Now, these are not records that you want, but these are records, unfortunately, that we're going to get. The national debt is going to be growing at least $3 trillion a year while Trump is president. That's $12 trillion in debt in the next 4 years. That'd take the national debt up to about $48 trillion. I think there's a good chance we're going to hit $50 trillion during the next 4 years. But if you understand where inflation comes from, and even with all the Republicans talking about it, Elon Musk posting about it, that inflation is the result of government spending, and specifically deficit spending, and you look at all the deficit spending that is coming, that is going to be even greater than the deficit spending we already had. And, a lot of people will say, well, a lot of it was COVID. It wasn't just COVID. We haven't had a COVID problem in a couple of years. And look at what we're spending. Donald Trump's last there's no more COVID. And the budget deficits are almost 3 times as big as they were pre-COVID. That's how much government has expanded since COVID. But I guarantee you, if it's not a pandemic, some other emergency is going to rear its head during Trump's term that is going to justify in their minds another huge increase in deficit spending, right? Because the government feels that there's no problem that can't be solved by deficit spending, because that's been the solution to every problem. So there will be some kind of emergency, whatever it is, right? Whether it's another pandemic or something else, right? Maybe even a fake alien invasion, who knows? But something is going to happen, and they're going to say, we need more government. Government has to come and spend, right? And so the deficits are going to be huge during the next 4 years. And even if nothing happens that results in a big surge in deficits, we're not going to cut back from where we are. That never happens. The deficits just keep going up. And the reason is because the cost of ending them is too great. The only way we can actually bring inflation back down to 2% is to burst the stock market bubble. You think Donald Trump wants to do that? He was bragging at today's press conference about the record high in the stock market since he going to do something that's going to crash the stock market or the real estate market, right? But that's what has to happen to bring inflation down, right? Because we have to have much higher rates than we've already had. We have to stop all the spending, all the borrowing, and that means a big recession. The recession is not the cure, but in order to have a cure, a recession is going to be a consequence of that cure. And if we don't want the recession, that means we don't get the cure. All we do is get a bigger case of the disease, which is what we're going to have. But the world hasn't come to terms with the higher inflation reality, that it's not going down to 2%, that inflation is going to be much, much higher than 2%. Indefinitely. And that means the bond market is still way mispriced. Gold is still way mispriced. The dollar is way mispriced. The markets are not pricing in inflation reality. They're pricing in an inflation fantasy that can't exist. And the only reason they believe it can exist is because they don't understand what inflation is. They don't understand where it comes from. And when you have Donald Trump criticizing saying our interest rates are too high and our inflation is too high, and wanting the Fed to cut rates at the same time he's complaining about inflation being too high. Well, when the Fed cuts rates, inflation is going to be even higher, right? Maybe he hasn't figured that out, because the way they have to cut rates is up. If the Fed keeps cutting rates, long-term rates are going to keep going up. And those rates are what Trump is looking at. So the only way the Fed is going to get long-term interest rates down is by creating more inflation. And so we got to pick our poison, right? But either way, it's going to be poison. We're not going to be able to do both because it is a political non-starter. Oh, by the way, talking about politics, I want to mention that we are having a commemorative special at Schiff Gold to commemorate 50 years of legal gold ownership. You know, it's hard to believe that for about 40 years, a little over 40 years, it was illegal for Americans to buy and sell gold, just gold bullion. I mean, you could own gold if it was in jewelry, but you couldn't buy a gold coin or a gold bar. Roosevelt made that illegal in 1933 by executive order. Now, how he got away with that? I mean, he got away with a lot of unconstitutional stuff, but clearly the government has no constitutional authority to make it illegal to own gold. You know, if you look at the Constitution, the only thing that could be legal tender in America is gold and silver. That's it. The states can only make gold and silver legal tender, and the federal government wasn't given the authority to make anything legal tender. So how can the government outlaw legal tender? Until Gerald Ford signed the bill in 1974 to re-legalize what should have been legal the entire time. And it went into effect in 1975. So since January 1st of this year, that's the 50-year anniversary of the, once again, right to buy and sell gold and silver. So we're going to commemorate that. And that was a good thing. The bad thing was making it illegal in the first place. But so we have a special. The promotion code is legal50, legal50. And you put that in on any order between now and the end of January. And you get $50 off on any order. And, right now, gold's still hanging out around $26.50. It's a good buy. One of the only assets that's not in a bubble other than silver. Silver has managed to get back above 30, which, again, I think anything below 30 is a great deal because I think that's where all the support is, just below 30. But we did go a little bit more below it than I expected based on a lot of the enthusiasm regarding Donald Trump. It's all, misplaced optimism. But you could also buy silver. So just go to schiffgold.com. If you buy online, you could just enter that promo code when you go to checkout. If you call in and you speak, and you will get your $50 off. Anyway, I wanted to talk about a few other stories that have been in the news recently. On Monday, we actually got this big rally in foreign currencies. Canadian dollar also helped by the news on the resignation of Justin Trudeau. But also the Washington Post came out with an article that suggested that Donald Trump was going to be backing away from his across-the-board tariffs. And the markets like that. And remember, a lot of traders think that those tariffs are bullish for the dollar. The traders are wrong. They're actually bearish for the dollar. But because they think they're bullish for the dollar, they've been buying the dollar. Well, when they ran the story in the Washington Post that Trump may not do it, then they sold the dollar. But when Trump read that story, he quickly came out and said, that's not true. It's fake news. And the dollar recovered about half of what it lost. I don't think it's fake. I mean, I think Trump is pissed that the Washington Post ran with the story, but I'm sure that Trump is likely to back away because he does not want to do anything that immediately harms the economy, and higher taxes on imports are going to do it. Weak economy. Trump doesn't want to do that. So he talked about tariffs when he ran as if they were great and if it was an economic miracle and he was going to do all these great things with tariffs and they weren't going to cost Americans a nickel because the Chinese were going to pay him and the Canadians were going to pay him and everybody else was going to pay him. That's not going to happen. It's the Americans who are going to pay him. And they would realize that if he actually imposed them, which is why I don't think he's going to do it. But the problem is if we get the income tax cuts, but we don't get the tariffs, then we just get even bigger budget deficits. Because the only good thing about the tariffs was that they would have offset some of the revenue that the government lost to income tax cuts. No tax on tips, no tax on Social Security, no tax on overtime, all that stuff, and other lower tax rates. So if we're going to lower taxes on what Americans earn, but we're not going to raise taxes on what they buy, it just means bigger deficits. So they are going to be bad for the dollar. The fact that we're not going to have the tariffs, rather, but not for the reasons that the traders think. Now, another trade that's been playing out this week, big gains in Fannie Mae and Freddie Mac. And I talked about these securities and I talked about the Trump trade before he was elected. I mentioned on the podcast that people were buying shares of Fannie and Freddie because they believed that traded companies again. And so these stocks were trading the common. A lot of people were buying the preferred. The common was around $1.50, $1.60, $1.70 before the election. They spiked up this week. Both of them got over $5. First, there was a news story that was written, not a news story. I guess it was a piece that was written by Ackman. No, not Ackman. Pershing Square by Ackman. And he, he's got a major position in Fannie and Freddie. He had it before the election, and so did Kyle Bass. So does the other guy, John Paulson. A lot of the people who were backing Trump and who were giving money to Trump's campaign, also owned these shares. And so he came out and he wrote an article predicting that they would be released, and it would, and that the shares should go up to $20 or $40 or $30, I forget. So, and then the government came out and said, yes, we are considering doing this. We're looking into it. We have a plan. And so the government confirmed, or the agency, that they are looking at a path forward. Now, I don't know if it's going to happen, but it's not good. If Trump really wanted to make America great again and make government smaller, but they shouldn't even exist. And so resurrecting them from the dead is a mistake. And Freddie were public the first time. There was no official government guarantee. It was just implied, right? It was an implicit rather than an explicit guarantee. Well, after they failed, the government did bail them out, even though they were not legally required to. Now, because they're now operated by the government, the guarantee is actually explicit. The U.S. government actually stands behind all the Fannie and Freddie securitized debt. If you try to put them back as private companies, if they don't have a guarantee, because you can't bring them public with an implicit guarantee. So you either have to make it clear to privatize them again. You got to make it clear: does the government stand behind the debt or not? Now, if they say the government stands behind it, well, then it's an even worse moral hazard than it was the first time. And Donald Trump would have worsened the housing market by making the government even more involved in artificially propping up the market, which we want to get the government out of it. But if you try to bring them public without the guarantee, it won't work. I think they'll fail again. I think they'll fail either way in the next housing downturn. I think they'll just go bankrupt. But if they come private, well, mortgage rates are going to go way up. And, a lot of people who are pushing the recapitalize and release plan, no, it won't. It will result in higher mortgage rates. Now, of course, we need higher mortgage rates. We got to get the government out of the mortgage guarantee business, and then we'll have higher rates. We should get rid of the FHA. The government should have no role in helping people buy houses. People should buy houses if they can afford it. And if they can't afford it, they should rent. And we don't want the government subsidizing people going into debt to overpay for houses that they can't afford. That is part of the problem. That's part of the reason we had a housing crisis and a financial crisis. But if the government is not going to be behind these things, then mortgage rates are going to be even higher than they would if they just stayed where they are, which is the reason that I don't think they're actually going to privatize it. I think that they're talking about it, that it's good for the people who bought it, who can sell now into the rally. To me, it's the same as crypto. A lot of crypto money was given to Trump, and Trump spoke positively about crypto. He talked about a crypto strategic reserve. Bitcoin went up above 100,000. In fact, it was back above 100,000 yesterday. Got to almost 103,000 before dropping back down to about 96,000 this afternoon. I think it's rallied back up about 97,000 as I'm doing this podcast. But just as I think I don't think that they can actually release these things from receivership, because the immediate impact of doing it will be higher mortgage rates, not lower mortgage rates. And if they do it with a government guarantee, well, that's just a huge mistake. Now you're just making something that was implicit explicit, and now why should the government guarantee the debt of a private company? And then you have all the moral hazard involved, even worse so than we had the last time when nobody was sure whether they would get bailed out or not. So that's another thing that, again, would be a negative for the country if they were to resurrect these things. Again, the smart thing to do is to get rid of them completely. But again, that would also result in higher mortgage rates. And, Trump doesn't want that. Nobody wants that. Now, it would also result in lower real estate prices, which would be a good thing, because the problem is real estate prices are too high. It's not just that mortgage rates are too high, it's that the prices of the houses are too high. And the best way to bring housing prices down, of course, is to allow mortgage rates to go up. But of course, also Trump somehow doesn't think that the Canadian lumber is helping out. Yes, if we didn't have access to Canadian lumber, it would be a lot more expensive to bashing Biden, although Trump apparently has the same position as Biden. But the Biden administration struck down the Nippon Steel acquisition of U.S. Steel. And the companies are trying to, appeal that. They're trying to use the courts to overturn that. I think the justification was national security, although there is no national security threat. I mean, Japan is our ally. We spend a lot of money defending Japan, right? So how we can consider Japan at this stage to be a security threat is beyond me. But to put everything in perspective, to show you how much the U.S. economy has declined over the years, the United States in total, not just U.S. Steel, but total steel production in the United States, we produce about 4.5%, something like that, 4 or 5% of the world's steel. We're the fourth largest producer of steel in the world. In 1950, we were the world's largest producer. We produced 50% of the world's steel, 50% in the United States. Today, 50% of the world's steel is produced by China. Right? China barely produced any steel at all. Maybe they didn't even produce any. Half. They're in the position that we were in. Now, is China producing all this steel because they're poor? No. They're a rich country. 50% of the world's steel. We had a powerful industrial economy. It's not like we don't need steel. We do. Just that we don't have the ability to produce it effectively as China does. Now, we used to. And, back in the 1950s, real wages in America were higher than they are today relative to the rest of the world. Americans enjoyed higher real wages relative to the world in 1950 than they do now. So the reason we're not producing steel in America to the degree that we were is not because the steel workers were overpaid. There are a lot of other reasons. Now, the steel unions, yeah, they had a big part in it, but it's not just high wages. There's a lot of other reasons. Now, if you look at the second largest producer of steel in the world, that is Japan. So Japan is number 2, but they only produce about 6.5% of the world's steel. So with China producing 50% and America and Japan collectively producing a little over 10%, you would think that an alliance between U.S. Steel and Nippon Steel would make strategic sense. The third largest producer now, because we're number 4. So they're producing more steel than we are in India. But this was obviously a good deal. Struck it. And now the government strikes it down on this nonsense about security. Look, it's unfortunate that U.S. Steel is in a position that it needs a massive investment from Nippon Steel, but it does. It would be great if U.S. Steel could buy Nippon Steel, but U.S. Steel can't afford it. U.S. Steel is not in the position. In fact, Nippon Steel was going to make about a $3 billion investment in U.S. Steel if this deal went through. But without the deal, there's no investment. There's no money. U.S. Steel has no other way of getting it unless the government's going to provide it, right? But I mean, I'd rather have a private company working with it than the U.S. government. But the reality is Donald Trump was against the deal too. He was against it on the campaign trail. So he's not going to try to reverse this decision because he's already said no. He doesn't want it. He wants U.S. Steel to be owned just by America, and so. But this again means less production in the United States. It's going to lead to higher steel prices than would have been the case had they allowed the deal to go through. Acquisition. The only reason the merger or acquisition is taking place is because it makes economic sense, right? The free market is trying to do this deal because it's a good deal to be done. The government comes in for political reasons, the labor unions or whoever it was that was against this, and just to make it sound, America, we need to own these things, we need to own these companies, we need to make our own steel. Yeah, we do need to make steel. We should be making more steel. We don't, but we can't just do it by a president willing it. It's going to require massive changes. As I said earlier, that in order to get much lower inflation, we have to have structural changes. Americans have to save a lot more and spend a lot less. But we already have an economy that's built on excess consumption. The GDP is powered by spending money. Well, if you save the money, then you can't spend it. And you have to save it to build the factories, right? If we're not going to get the Japanese savings, we got to generate our own. Well, we can't save and spend the same money. So in order to rebuild our manufacturing infrastructure, we have to have a severe recession in the process, because we have to stop spending money so that we can use it to make these investments. But we also have to streamline the in the first place, and so we have to make those changes. But again, those are not the changes that are coming, because those are changes that are going to result in a short-term decline in how we measure the economy. So things have to get worse before they can get better. But again, Trump didn't campaign on making things worse before they got better. He campaigned on immediate gratification. Trump campaigned that things were going to get better as soon as he won the election. And so that is what he's going to try to do. And the only way that Trump can try to make things better, at least superficially, which is all he can try to do, is deliver superficial results, because that's all he delivered during his first term were superficial results, is to try to blow more air into the bubble. But my point is, I don't think he can do it. I think the bubble is too full of holes now to blow it bigger. And I think the markets are going to be so disappointed in the resurgence of inflation that alone is going to pull the rug out from under it. So I still think that I've got this thing handicapped correctly, that we're going to see an explosion in the price of gold and silver as the world continues. And the dollar's share of global reserves hit a new low, and what's replacing it is gold. And the central banks, I'm sure, gold. And so, we should be doing it. Take advantage of the $50 special at Schiff Gold. But I think these gold mining stocks, which went way down last year as a result of a huge sell-off post-election, the markets have got this completely wrong. When it comes to the outlook for gold company profits. We should be loading up on these gold mining stocks. We should be buying the emerging markets. The emerging markets are not going to suffer from the Trump tariffs. To the extent that the tariffs are imposed, it will end up being a relief. Remember, contrary to what Donald Trump claims, we're not propping up the world. The world is propping up us. We do need their products. What they don't need is our fiat currency. They have the ability to print their own money, right? We don't have the ability to make our own products. Printing money is easy. Just run it off the presses. You don't even have to run it off a press. You just create it out of thin air, right? So any government can create currency. They don't need ours. But producing real goods, that requires real capital, real labor, real infrastructure, right? Real resources that we don't have. And so Trump has it backwards. The world supports us, not the other way around. And he's about to learn this lesson the hard way. Starting to come out of the tech bubble today, too. We had a big rise in tech stocks yesterday, but a huge drop today as bond prices continue to fall. Eventually, this reality of rising interest rates and a weakening economy, we'll see. We get the jobs numbers on Friday. We get the non-farm payroll numbers. It was delayed because of the holidays, so we're going to get it on Friday. I will talk about that jobs number on the next podcast, but I believe that one of the real soft spots in the economy is the jobs. And I think we're going to start to see some disappointing numbers coming out of on the jobs numbers. And so that should also weaken the dollar and strengthen gold. But a lot of people are going to be thinking, oh, at least that's going to help bring down inflation if we have a weaker economy. No, the weaker economy isn't going to reduce inflation. It's actually going to worsen the problem because it's going to result in bigger deficits, more money printing, and that's more inflation, not less. Anyway, have a great day, everybody. Don't forget, if you like this podcast, give us the thumbs up. Don't forget, again, to subscribe. We got a lot of new content coming out this year at Schiff Sovereign. So if you're not currently a subscriber, make sure and do that. Bye for now.